Hey, what's up guys? Endgame here, and today I'm going to talk to you about possibility of going into the 2023-2024 recession. We're going to discuss briefly if we will have a recession and what are some economic indicators that are pointing towards a troubling times in the US economy. So let's get into this. So majority of voters think that economy will be in much worse shape in 2023 than it is now, as per a Wall Street Journal poll. So pretty much everybody is pessimistic going into 2023. And this might actually be a self-fulfilling prophecy, because if people are expecting recession, they will stop spending, they will stop investing, and basically economy will come to a halt. And this will be a self-fulfilling prophecy in a sense. So let's see here. Americans' personal saving rate has hit the lowest since 2005 per Axios. So the share of disposable income left over after spending is at the lowest point since 2005. So people don't have much money. People have pretty much spent all their money. They don't have anything in savings left. And this is an issue because once the economy starts to deteriorate, expenses might get higher, but these people have nothing in savings. So they will most likely be cutting costs throughout the whole year and just trying to survive 2023. See, the US stock market has lost almost $12 trillion in market cap from its January high. Now that is astounding because stocks are in people's 401ks, IRAs, they're in their saving vehicles for college funds for their kids. Stocks are pretty much the essence of wealth, real estate and stocks. So if stocks are down drastically, pretty much everyone's wealth has decreased drastically, which will most likely lead to much lower spending eventually, because if you don't have that security of having all that equity in your bank account, you're not going to spend as much money because you're going to be worried about shortages and just basically running out of your savings. Let's see what else. Interest rates on credit cards have climbed to almost 20%, guys. This means credit card companies are thinking people are really bad at risks, so they're giving them sky high interest rates to compensate for this risk that banks are actually taking by loaning out the money, because they will most likely see massive defaults in 2023. If not massive, they will see substantial defaults, and these defaults will have to be compensated from the higher rates that credit card companies instituted on their cards that were issued to customers. So credit card companies are pretty pessimistic going into 2023, and that's pretty much the sentiment of the whole market right now. Almost 1 in 3 car buyers are now taking out 6 to 7 year loans on used vehicles to help lower monthly payments. Now this is on used vehicles, which basically means people just don't have cash. They don't have equity, and they don't have anything to put down for their vehicle, so they're just financing it for 6 to 7 years. And I wouldn't be surprised if car loans eventually became a 10 to 15 year annuity, basically like a 10 to 15 year loans that will help people just spread out their payments as much as possible so they can keep purchasing vehicles. Let's see what else. 33% of adults aged 65 and up reported applying for food stamps or visiting a food pantry over the past 12 months. Now, this is compared to 22% that did so in 2020. So this is a 11% increase. This is a third of the US adult population aged 65 and up that went to a food pantry to get some extra help. Now, this is most likely caused by inflation. Prices have just been rising consistently throughout the year, and people's budgets have been shrinking, their saving rates have been shrinking. So they came to a really bad place where they just really needed some help. And this year, 2022, this past year, 2022, people really needed a lot of help. And you can see inflation has just been running rampant and just pretty much wreaking havoc on the whole economy and on people's savings rates. An estimated almost 2 million UK households missed a payment in the run-up to Christmas. That's rent, mortgage, or credit card bills. So I wanted to include UK because their economy is sort of comparable to the US economy. And we can see this is not just a US phenomenon. People are hurting pretty much everywhere. Inflation has just increased prices so much that people are actually missing payments. And missing payments, they're getting late fees, so they're getting put into a much worse position than they previously were in. So this is not good. And I want to show you guys here a historic sell-off for bonds. So pretty much everybody's dumping stocks and just parking all their money into bonds. Bonds are pretty safe. They don't deviate much from their yields. They don't deviate much, they do deviate, but not that much, not as much as stocks, they're not volatile. So pretty much when everybody's panicking, when everybody's scared, everyone just runs into bonds. Everyone just goes for bonds and parks their money. They don't want to have to worry about volatility, worry about stocks, or worry about economy. So you can see this has been a historic sell-off for bonds. There's not been such a sell-off in the last 2 decades. So this could be a dire warning for the economy, or at least for the stock market. So this is a little bit of good news. You can see prices have actually been declining since March of last year. We've had an overall drop in televisions have dropped about 17%. Tickets for sporting events are almost 8% less than they were a year earlier. And renting a truck or a car is actually a lot less expensive now. So we can see prices are coming down, and this means that pretty much inflation is being tamed, and the Federal Reserve will not have to keep increasing rates, or at least increasing them at a much higher clip or for a prolonged period of time. So we are expecting Federal Reserve to probably stop raising rates in Q1 or Q2, and they actually might even start slashing rates. So one last thing I want to mention is that Fed will pivot because we have prices coming down, and we could eventually even go deflationary, which some people have been talking about, like Elon Musk have been issuing warnings that we're actually in a deflationary environment. And what this basically means is that prices are going to go lower and lower. So instead of inflation where prices rise, we have a complete reversal where prices just start to tank. And there's several reasons this might occur in the next 5 to 10 years. And that's primarily due to technology. So self-driving tech, for example, will have us cause less driving accidents. This causes less cars to be purchased because the cars are not damaged. This also causes less repairs, so less money for parts and repairs. This also lowers medical costs because self-driving cars will be much more efficient than humans. They will cause much less accidents, and that will lower premiums, lower health bills, and costs will just start to drop drastically. And another thing is self-driving cars will be on trucks, pretty much transporting goods all over the country. And once transportation costs are actually one of the key components of prices. And once these transportation costs start dropping drastically because of self-driving trucks, we'll see prices of all goods just start to drop, start to dip in price sporadically, and just keep going down and down. And this will cause deflation in the next 5 to 10 years, which will force the Federal Reserve to put on the money printer just to flood the markets with cash, because everything is just tanking in price, and people are not buying goods, so they will have to flood more cash, just give everyone cash, just to keep spending and spending, just to keep prices stabilized. So we will most likely have a recession in 2023, 2024, but I want you to consider 2 things. First, we have been in a recession this year, 2022. Actually, we had 2 declining quarters. GDP declined 2 consecutive quarters, which is the definition of recession. So we have been in a recession, so the next 12 to 24 months might not be as catastrophic as everybody is expecting it. Because if everybody's expecting a recession, we will most likely not have a severe catastrophic collapse in the economy. It's when people least suspected that the economy starts to sort of crumble and just basically loses its way. It really reminds me of the movie No Country for Old Men, when the guy is looking out the window and the lady asks him, "What are you looking for?" And he says, "I'm looking for what's coming." And she says, "Oh, well, nobody sees that." And that's sort of what's happening in the stock market. Everybody's expecting to see something. Everybody's waiting for a recession. And we might not actually have it. We might just have a bunch of hedge funds just bet the other way and basically take the opposite side of the trade of everyone betting on the recession, and they will bet on us not having a recession. They will just clean out and have record profits like they did have this year betting against the market. Citadel Investments, for example, hedge funds that had the best year ever on record, and they're actually giving their clients back a substantial amount of money in the form of a dividend. So that's pretty much it. But I wanted to talk to you guys about possible recession in 2023, 2024. If you guys want to have if you guys have any opinions, or if you want to discuss a little bit more if we will have a recession or how severe it will be, you can just leave a comment down there. And guys, like, subscribe, and share. And remember, if you're here, you're in the end game.